Welcome back to the Knowledgeable Podcast. This is episode 6. Disclaimer, anything I say or do in this video is not financial advice, or anything I say is not to go out in the world and go do it. It's just really for entertainment purposes only. So we're gonna talk today a lot about, so NVIDIA, I know I'm back on NVIDIA, is killing me. It's bad, but I'm okay with how it is because NVIDIA is a very the trend is just so good on the upside right now. After hours on earnings on May 24th, so Wednesday, which after hours is after 4 p.m. Okay. The stock basically skyrocketed way up. Okay. And of course, I still had short positions on it, so my shorts are down bad. It's whatever. I think I have to regroup and rethink my position. But I still come to the conclusion that you should never fight the trend. Never. I do think at some point it is going to come back down. Well, either way, everything that goes up comes down. But what I have learned for this time holding short positions is that you could be correct, but it could take longer than you could stay solvent as being in your short positions. Right now I can stay in them because I'm in ETF shorts, I'm not in margin shorts or put shorts where there's expiration dates. But I still could get charged $30 if all of a sudden, they decide to do a reverse stock split, which is basically where they shrink the number of shares. So they take it from, let's say, 1 million shares to bring it down to, we'll say, to 500,000 shares. So then the price goes way up. But certain brokerages charge a fee, and it's like $30 to $35, and I'm not willing to pay $35 on a small account. Now, if I had $5,000, it'd be kind of different. But I don't have $5,000 in my account, and even if I did have $5,000, it is a big chunk for me to lose. Now, if it was $100,000, totally different. $10,000, you're getting there. $40,000, you're there. But on an account that if it was positive, $1,000 account, $35, in my opinion, is a lot since I can't trade. I am not as good as a trader as I could be. Now, it doesn't mean that I'm not going to be a good trader, because I believe that at some point I am. And I have traded the trend before. Like one time I got in 2 trades with Tesla because, the one time was because of someone else telling me, which is probably not a great idea to do. But I just saw this quick boom, 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 see guy, boom. And, I got in, boom. But I had to be quick. I got in and out. I was like a scalp trade almost, boom. But all I did there was listen to some guy, which is not really good advice to do. The other time I did it was where I got into the Tesla calls which are calls are something when the stock goes up, okay, you make money. And that's like an option. What's one option. And puts are when you want the stock to go down so you can make money. Or sometimes you could play around. But, it gets really confusing. But for a call, for instance, I got in a call for Tesla, and in like 5 minutes, I made $100, which is pretty cool. I made $50 in a minute. But what I did wrong there was this, okay? I stopped trading that day. But then, like, I was starting to get my account back together. Back. And all of a sudden, I started to play around, and then collapse. Now, I'm not saying I learned anything from those trading up, but I just did it. It was, in my opinion, it was kind of like a gamble. It wasn't really looking at charts. It was just, honestly, I guess you could say after looking back, just following the trend, honestly. Now, I don't recommend doing that. Okay, what I was doing was really risky. I mean, that's like you're just throwing in money into a fire, and if it goes, it goes. You're just gambling at that point because you have no understanding of what the hell's going on. But at that time, Tesla was going up, so I just. So, yeah, I'm getting killed on the video, and it sucks. But at the end of the day, you have to look at yourself in the mirror and go, okay, why did you do this? What is your thesis on the video? Is this trend gonna change? Because right now you're fighting the trend. And when people fight trends, and you're now this guy that's fighting trends, don't go well. So I have to look at myself and go in the mirror and say, do I want to keep fighting this thing, or just take the losses and regroup? I'm going to have huge losses, but I'm going to have to take the losses and just regroup. Do I want to do that? Or do I want to wait until this market actually goes down? And that, to me, that's going to be tough for me to do because, I don't know how much more longer this thing could go. I mean, at some point you have to question, do you want to just follow this trend and tell everyone else to F themselves, basically, and just follow the trend, which is what you're supposed to do. Trading is tough if you're not following the trend. It's almost impossible to trade if you're not following the trend. And I'm not saying that I'm not trading. I was doing this on a monthly basis, and I was correct. I didn't sell because I was a greedy son of a bitch. Okay? Now, let me just tell you how it is. I was greedy, and that's why I didn't sell. I was hoping, the one position I should have sold out of totally. My short ETFs on SPY or on the S&P 500, I should have sold out of those like it was candy because I was making over 22%, and I should have just said, F it, get out. But I got greedy, and I was going to play this game. If I would have gone out there, I could have secured my profits, and then I could have gotten back into it and rode it back up again. Not as high, but I could have rode it back up, made like 5%, get out, I didn't. I was an idiot, and that's just what happens. SQQQ, which I think I told you guys before, I was only making 3%, so I was a little annoyed because I was like, I've been in this for a while. I have a big position here. I'm only making 3%. Maybe we can get this pushing out. I should have stuck to my goal. SPXS, I should have gotten out of because it was making me 20%, over 20%. My goal was to make 20% on that puppy, and it made it. And I should have gotten out, and I didn't. Okay? SQQQ did not. I probably should have averaged, I should have probably took all the profits and said, okay, well, if this goes higher, then you can get back into it. If the market goes higher, maybe you get back into it, try to get it, but I didn't. So now this is where I'm at. And NVIDIA, you know, I might be wrong. Well, I'm definitely wrong right now. That's just what it is. And listen, I'm not making excuses for myself. Okay, at the end of the day, it's on me only. There's no one else making these trades for me. And even if someone said, oh, you should get in this or get in that, it's still on me because I'm the idiot that pressed the button to say, yes, do this thing. That's what it is. Everyone's account is different. Okay? And, you know, I'm not mad. You know, I'm just like, whatever. You know? I try to control my emotions now. I try to control the emotions. And it's still tough, but I try to control my emotions and go, relax. Wait a second, look at this. Is this good? Or is this bad? And I'm not the best person to look at because, as you can tell, I'm doing a horrible job. Now, my account over the year is up. It's not beating the market, but it's up. But that's because I didn't sell any of my positions. If I sell my positions, I'd be down over $100 right now. Probably close to $200 right now. If I sold, as of right now, I'm down to over most of my trades are down. You know, I'm into thinking about selling SoFi because I'm making, you know, 10%. I was hoping for 20. I got close to it, but I never got to 20. So I may start to get out of that. And again, I'm not trying to fight the trend here, and I know I am right now, but I'm not trying to fight the trend here, but no. All I'm going to sell is some of my smaller, bigger positions in SoFi, so my cost average is smaller. That's all I'm doing. And I can get those out of here because I made some money at the end of the day. Or what I could do is I could take my smaller guys that are making even more money than these guys up top, and I sell those puppy shares, and then I keep the shares that I still have and try to ride them out. Trading is one of the most gruesome, toughest things in the world. I can tell you that from experience. It is not fun. I don't recommend anybody trying it. It is tough. But if you want to learn, you have to learn a lot. And I think I have failed to do that. I mean, I try my best to learn, but recently, I had to stop at one point trading options because it was just like I was just killing myself at points with the stupidity that I was doing, or not understanding this, or not trading a strategy, just trading. And it wasn't working. So, and then at some point, you know, I looked at myself and said, okay, now we're starting to get somewhere. Not with options, but we're trying to get somewhere with shares. Because I had some advice from someone that said, listen, until you become profitable with shares, then you can trade options. And I honestly like the advice. And I only have trade options once in the last 3 months. So, and even, I think it's been like last like 4 months, 5 months, you know. So I don't trade options as much as I used to. I used to trade them all. That would be the trade. And I used to not trade shares. But I also disagree with that advice at the same time. But at the same time, for someone like me, it probably is good advice. Because options are different than share trading. Because one option costs 100 shares, okay? It's 100 shares that you're trading in one option, okay? So if you buy one contract, you just have 100 shares right there. So for small accounts, it's really attractive. But you have to, first of all, it has to move by 3 times. So the price has to go up $3, okay? And in some circumstances, it has to go up even higher than that because, so it has to go up at least $4 for you to just break even. So if it doesn't do that, then you're kind of sitting there going, the entire time, and you're just like going, oh. That's why options are so tough, because if it doesn't move, if it doesn't go, it just is there, it doesn't. But it's a great way to learn. Listen, this is like year 3, I guess. It's coming up. Next April will be year 3 of me being in the stock market. Am I a smart trader? No. Can I be? Yes. Listen, it takes a lot of account management, a lot of learning to do it. And you could do it with fake money if you really want to, because you're not risking X, Y, and Z. But I think it's still going to be tough when you get out into live trading, because it's, that type of trading is not going to save your ass. Okay, because now once you get into live trading, it's your money. It's not Joe Schmo in the corner's money, it's your money. When you make a trade, okay, you ever make profit, and I've learned this the hard way multiple times, you have to use the profit money, not your capital, because you already made profit. But you should always go only to a certain percentage. If you go from making $10,000 in a trade, okay, and then at the end of the week you're now down to 2, you still made $2,000 in profit. You just went from, let's say your balance was $500. Now you're down to up to $2,000. Now try to figure out what you made a mistake there. There's some mistake that you made there. The mistake maybe was, maybe your account management was bad. Maybe this was bad. There's a lot of things that you did wrong. The other thing that's good is that you can use multiple accounts. So when you get profit and you get a certain amount of profit, because the other thing I've learned that I haven't used very well, and I have to get back towards it, is, and I learned this a while ago from someone I listened to, and they said, whatever you trade, okay, let's say your account's $500. Let's say you get to $1,000 account. Well, you're going to have a tough time trading at $1,000 account because you're used to trading only $500. Now, 500 to 1,000 is not as tough, so let me give you a little bit more of a different detail. Well, now let's say you're trading a $10,000 account, okay? Because a $500 to a $10,000 account is totally different, okay? You can now trade a certain amount higher and all this other stuff. I have to get back to, doing the goals, working harder, building better, and growing, learning at the same time, and being able to build my account back up to if I sell my positions. The first year I was in the stock market, really almost the second year, is what I did was I lost a lot of money, okay? the first year. And someone told me, they said, don't worry about what you lost. You lost it. It's gone. What are you going to do? It's absolutely gone. And it kind of changed my viewpoint a little bit on the stock market. And honestly, I guess like a couple months after that, I started to get my account back because I wasn't chasing this shit. Now, again, it was mostly because of Tesla calls, and I kind of think it was a little bit of a luck trading. And actually, the one trade that I actually did, I wish I never did, because that week I made $80, okay? I could have made, instead of making that $50 in 1 minute trading, I could have made $150. Okay? Yeah. Now, at the end of the day, I was fine because I was like, listen, you made profit and you made profit again. You got your account back up by selling that $30 biotech company that if you would have stayed in it, you would have. But then you also made $50 in a minute in that Tesla call, thanks to the guy that sprouted out something, and I just pushed the button. So I just made $80 in about a week. Now I was in about $50 in a week. Okay. The next trade I did, okay, which was I did some, what was the other trade? Yeah, another Tesla trade. I made a decent amount there also. But I got my account back up over $400. Okay? Just from like those 3-4 trades that I did. And then I think I got it up a little bit more, and then it just back down. And kind of after that, I kind of told myself, you guys got to stop. You need to just take a step back and look at yourself and go, what is going on? Because recently, I've just been firing into these short positions, and I think that's not correct. I shouldn't be doing it. So now I'm stuck. I'm losing a lot of money, and well, in my trading account, it's a lot of money for my trading account. I should say it's not a whole lot of money considering. For my trading account, it's a lot of money, and what should I do? How should I just sell it? Should I start hedging against it? I still don't have enough money to hedge it totally, but I could hedge some of it. So it's tough, and you have to manage your portfolio correctly. Or you're gonna get screwed. What can I tell you? You're gonna get crumbled. Trading shares and trading options are totally different stuff. I have done both. They're not the same. The option realm, first of all, the option realm is all the way in Chicago. So like that's where that is. It's not even in New York. Like where people trade options, that's all the way in Chicago. Futures is down in New York. I think shares is also down in New York, but options are down in Chicago. I'm sorry, up, whatever, down, up, whatever, sideways, whatever. In Chicago, right. That's where the option exchange is, where all the trading goes into. It's not in New York. The stuff that's in New York is future contracts. And probably Chicago has some too, but and New York has other stuff. They have You know, you can probably trade shares, and you might even be able to trade shares in New York too, in Chicago, but I don't know. But yeah, you have to understand something. The world is what it is. And at the end of the day, if you're not following the trend, you're going to get screwed. And NVIDIA, let me tell you, it irritates me to say this, and I probably won't be wrong, but I may not be right in time for me to make money. So, is it time for me to get out? I don't know. I would have to look at the chart, see what the chart's doing, see if it's doing the correct thing, moving down, up, all over the place. I think I can still make money in NVIDIA, but it would have to be a very fast decline. Because I started shorting it around 230, and now it's all the way up to 385. But I did keep going it up, and then I kind of stopped for a little bit, and then did 2 shares. So, I mean, I still think I can make money on NVIDIA. I'm just not going to make as much as I was hoping. If SQQQ, I'm a little worried about. That one I'm definitely worried about. NVIDIA, I am. I'm kind of worried about all of them, but at the end of the day, I'm starting to learn my mistake for it, and I just got to try to fix this mistake. And right now, that's what I got to do. There's nothing easy in life, let me tell you, or everybody would be doing it. But if you become really good at it, at the thing that you want to do, you can be. Because one of the things that I was doing that I actually was starting to become decently good at it was finding companies. For whatever reason, I would search up on certain places that I use, and one was Finviz, and it's a free place, and I just search up different things because you can do different things. It's tough to explain. And I would find these companies that are just and they don't suck, but they're just really undervalued. And I would take them and I would go really in depth into different companies. Excuse me. And I didn't always do well with these, but I kind of found some. And there was one recently that I saw that I really, really liked, but I didn't go in it, and I wish I did. Now, I probably would have made, Kazubi amounts of money, 10, I probably wouldn't have made 10%, I probably would have made 5 or 8%, but it's still more money than I had before. So, the other thing that someone taught me, actually 2 people told me was, never look at the money value. Look at the percentage. Anytime you go into money value, if you're trying it, money value is going to hurt you on the long term. Okay? And somebody could argue that percentage will too, but the more that you have positive percentages than negative percentages, the more likely you're going to have a positive account. Okay? If you're trading responsibly. Now, if I sell some of my contracts, or not contracts, my stocks, yeah, well, my short positions, yeah, that could really screw me. Then that idea would be wrong. But yeah, I learned that, and I started to use it more often, and it has become better for me. But at the end of the day, right now, I'm not doing too well because I have to, win back the trades. I have to figure out, I'm going to have to figure out a way, just do I sit in it? One guy I listened to, he has a lot of shorts on it, and he's a smart guy, but he also doesn't do. He's more of a value guy. So what he likes to do is he likes Nvidia, but he doesn't want to buy it at this type of price right now. He'd rather buy it at $100 and like $30. So he bought put contracts to try to get some income when it comes back down, and then he'll sell them so he gets his income, and then he can go buy the shares at that price, and sometimes he would use the income to buy the shares. That's one way to do things. Is it smart? I don't know. Is he doing correct right now? Good right now on those? No. That doesn't mean that I should be in short positions. And that is not my thesis on the video. My thesis is starting to become more correct, and I'm adding more stuff to my thesis. It doesn't mean that's an all. But the CEO of NVIDIA even admitted that they're going to have competition. That the government of America could hurt their own business. So, that's a risk. And I don't think that these companies are putting in the amount of value that they're supposed to be putting in, is my whole point. I was wrong for this whole time. I'll tell you that. I should have been right, but at the end of the day, I haven't been, besides one or two times. And that's a big problem for some guy like me. And it's good for me to take a break sometimes and regroup and just stay positive. That's just what I do. And you're not going to win every single trade. Let me tell you. If you could win every single trade, you'd probably be a millionaire today. Now, actually, no. You would probably be worth $1 billion today, because people would start asking you to manage their money. And then you could take fees, so, yeah. You're going to lose money on every other, on trades. Again, I don't consider myself a full-time trader. Okay? I am a trader. I'm not really an investor. But it's hard to trade when you're a part-time trader. I'm always watching the market, trying to see what's going on. Probably should be doing more of that. But sometimes it's tough sitting there when you should be watching your market, looking at this, looking at that, and doing this and doing that, But I have to learn more, I have to do better, try more things, get better, and do a lot more stuff so I can be a better trader, better person, better everything. And learning is key to life. If you don't go out and learn, you don't try to learn a skill, I hate to say it, but you're not gonna make it in life. And I'm not saying that I'm an expert at anything. No. My trading skill is basic. Which basically means I might know a little bit more than some Joe Schmo on the street that knows nothing. I think I'm better than Joe Schmo on the street just because I understand the market more than Joe Schmo on the street that never has traded in his life or never even knows what the hell the stock market even is. But I still think that I'm not that smart. I have a lot to learn. It's just what it is. And I think I have to get better. I think I have to take more risk, a little bit more risk. and try to change the way I'm doing things, try to make me win a little bit more trades. And look at the trades and say, oh, forget about it. Just go into it. A lot of people in a lot of places are, they're trying to go out and get their degrees. Listen, I don't care if you want to go out there and get your college degree. Go do it. But I think it's a way for you to hold yourself back. Let me tell you. Because a lot of people hold themselves back. I would actually include myself. Let me tell you. I mean, I could already have a business set up if I was more persistent. So yeah, I held myself back. I needed to call more places. I needed to do more things. And we have to continue to learn more. We have to continue to build better networks, better relationships, better everything. I mean, honestly. Today's world could be a better society if we, as people, could be way better. And I know once I get started, I'm going to want to keep going. And I just have to get started, I have a lot of knowledge, but I don't take action with my knowledge, per se. Yeah, I do stocks, but I'm not as active, I'm not really as into swings with options and all that crazy stuff that a lot of other people are. So sometimes I just gotta deal with things the way they are. And, that's basically it about the stock market. I mean, the video did shoot up. I still, I'm gonna admit this. I'm gonna say this. At some point, the trend will change. And whenever it does, I just hope I can make some money. And the reason why I'm not following this trend right now, because I shouldn't say I think, because I don't know. Because I've been saying this for a while, that it's almost at its end, and it hasn't been. So I'm not going to say that, but right now I don't feel comfortable trading NVIDIA because I don't think it's going to be good for me just because I'm losing so much on the other end to just start trading upward, because I don't think that's really going to make my life any better, So, at the end of the day, I have to learn from this experience, got to learn from this time that we have here, and we have to move on, and we have to grow from this, and that's what I got to do. And, I guess this is one step in trying to become a billionaire. I mean, I don't know. I guess it is. I don't know. I don't know. Today's society is just crazy. But that's just because we're human. I mean, that's what it is. I think everybody could be better if they wanted to be better. But a lot of people in our society do not want to be better. Which is fine if you're happy. And there's a lot of happy people that just want to be bleh. I consider it blah because I don't think I could do it. I think a lot of people could say that I'm blah right now. They're correct. But I have to move the needle. I have to grow the needle. And I gotta keep on moving the needle to make me better. To make me grow, to make me move up in life, do other things, do other experiences. Try to create a skill that will benefit me in the long run. And if trading's that skill, then that's what it is. And the stock market has not just taught me a lot, it has. Because, you know, I gotta tell you, like, I'm not saying I accomplished anything, and if someone said that I did, I would laugh at them. Because, what did I accomplish? Wow, that I can still be in the stock market. You know, that doesn't, like, that's not really accomplishing anything. I think I could teach people how to budget their money better from being in the stock market, from reading companies' financial statements. You know, I've read probably, I don't know, like 30 to 40 financial statements, which someone in the field would probably laugh and be like, oh, I've read thousands. You know, that's just like tens of thousands. That's just like chunk change. And they're probably right. And I like reading financial statements because it tells me how a company is going or what it's doing. And it's hard to listen to analysts because analysts are going to tell you what they feel. And it's not that the analysts are wrong. It's that the analysts are not always in the best interest of the people trading. You know? Like right now, the analysts are like pushing the NVIDIA's target price up, which I kind of can understand, but some of the pricing I'm like, okay guys, like, yeah, it's possible. But is it going to do that? Because usually what they do is they look at it as a year-to-year basis. So at this time next year, should it be at $420? Their target, literally a couple of days ago, was 300, and the highest target, well, whatever. The middle target was like 350 or whatever. So 429 or something. I don't know. I don't know what it was, but it was like 320, I don't know. And then it got past that, and then of course got past the highest number, which was 394 or 400, whatever. Do I think NVIDIA has more to run? I don't know. People that are, you know, doing their thing are just going to keep running NVIDIA up. I do believe that maybe it's not a bubble, but, you know, I don't blame the traders for what they're doing. I am not following the trend, but I'm not trading it per se. But I'm also not long investing it. So you could argue that I am trading it, trying to get a quick buck, but monthly, which is not really going to be good, but whatever. It's a better way of saying I'm using short positions so I can maybe make some money when it goes back down. But I'm not doing it. I got in too early, okay? Because I thought it would go down by then, and it didn't. And I have to now rethink my positions, and so that's what I got to do. But moving on to real estate, and I'm not really going to talk too much longer because I don't really want this video to go close to an hour. But moving to real estate, this is just a real quick segment. You know, I know there's a lot of YouTube videos out there saying that the real estate market is about to go down and blah, 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 blah. I don't think they're wrong. I don't think I know, just from, people that have been in the industry for over 25 years, 30 years, that have sat there and told me that, for watching YouTube videos is what I'm saying, and not like face to face. Yeah, I don't know, I don't know those type of people yet. I wish I did, personally. But no, so they were saying that, like, usually you can tell once the big guys are starting to fall, which is exactly what's happening. If you look at San Francisco, which is probably one of the greatest times to invest at this point. Because a lot of the properties are just crashing. But is it a good time to put money in there is what you have to figure out. Because you have to run the numbers. You got to go, okay, listen, you're going to pay 6% interest, let's say. We're just making some random number. Let's say you're going to pay 6%, 8%, whatever. Well, are you going to make any money off of that? Because you're still buying an office building, right? And office buildings are not doing so well, right? So I think from what I've been hearing is that what these guys have been saying is that if you can create something in office buildings like apartments or something, which is going to be really expensive, and you can make money out of that, that's how you're going to be able to transform these office buildings into great things. Because there's a lot of buildings in New York. Well, I shouldn't say a lot. There's some buildings in New York, okay, that are not fully, filled up. But what they did was, actually, that's a lie. Well, no. They aren't fully vacant. Like, a lot of their properties are vacant, okay, in New York. And the penthouses, at least, and I'll explain why. So, what the ultra-rich, or you can even say some criminals to make a lot of money, is they need a place to store some of their cash, okay? So what they do is they take a company, and what they do is they put the penthouse. Let's say the reason why, like, some of these penthouses that are like smaller than, they're still big, but they're smaller than like some big, like a 10,000 square foot house, but they're going for like, $20 million, and this house over here is only going for X, Y, and Z. Well, one, it's because it's in New York, but two, it's because these people just store all their money in these little boxes so they can save on taxes, so they can do a whole lot of things. Hide their money, if you want to say. I mean, a whole bunch of things. And so a lot of times these people don't live there. They don't even rarely go there. And they're just vacant buildings that are there. But that is the penthouses. The office buildings, I don't know if it's one of the office buildings that I think someone owns, they realized it was vacant. So they said, okay, wait a second. We can put screens on the outside of the building, and then companies pay us to put their ad on there because it's in Times Square. And that's what this building did, and that's how they were able to be okay with the building being basically mostly vacant, and how they basically can save on the building. And that's how they did it. And so you have to come up with creative ideas. So, there was this one guy all the way up in Canada, okay? He bought a building on a credit card. He bought a $65 million building at the time on a credit card. I'm serious. And he said that the people looked at him with 10 heads and said, how the hell are you going to buy a $65 million building on a credit card? Are you nuts? And he said, yeah. And, he's worth a lot of money today, but as you probably can tell. But the world, the real estate market is coming down. And I hate to say this. I'm not saying this for positiveness or telling you whatever. The real estate market is probably in a worser position than in 2008. And I'll tell you why. Not that there's not enough buyers. There were. But a lot of the buyers are now realizing, we can't afford the house with the amount of mortgage rate that it is. And the sellers are kind of like, we don't want to sell because then we have to buy something at a 6% mortgage rate. We might as well just keep the house that we have now. It's starting to go from a seller's market to a buyer's market. Now you're going to ask, what is a buyer's market? Because you'll be like, well, wait a second, weren't we already in a buyer's market? No. That was a seller's market because all the houses were like crazy prices. There was a CIA agent that I listened to at times. I haven't listened to him a couple months, but he sold his house. Not at the peak, of course, because it's already, you can't, find things at the peak. Never timed the market, let me tell you. But he sold his house because he was like, you know what? This is really, really expensive, okay? And I think this was kind of right before, they really started to pump up the interest rates. So he got out, he bought a rental property, and now he's just going to wait for the price to go down. Now his problem is going to be the interest rates. But if the property at one point was worth, $400,000 and now it's worth $200,000 or maybe even $150,000 in some places, 6% on that type of property, $150,000, it's not that bad. So sometimes you have to move around, do other things, and right now it's not a buyer's market. It was a seller's market. And right now we're starting to transition into a buyer's market, which basically means that the prices are going to go down. Whenever you hear there's a buyer's market in the S&P or in the real estate market, I should say, that usually means that the prices are going to start going down, or they already did. And don't get me wrong, in some cities already, they have gone down 40% already. But that was already expected. They possibly could go down another 40%. If you look at Las Vegas, which is just crazy. I mean, you understand. Las Vegas is literally in a desert. Okay? I mean, the mob just literally built buildings on top of a sand dune and just said, "Voila, here's a city," and they just magically built these buildings. No, so... But that's just how you have to do it. But in Las Vegas, the strip is still growing. It's gambling city, so people go there and just gamble. And you could argue that the stock market is just a gambling machine. Maybe it is. I disagree. If you know what you're doing, it's not a gambling machine. And I'm not saying I know what I'm doing, but, if you know what you're doing, it's not a gambling machine. Because, if it was a gambling machine, then a lot more people would lose money. A lot of people do, but, not everyone. Going down and gambling is mostly a gambling machine. besides like in the stock market, besides like very few people. That's how in gambling season is. But I think I'm about to go over an hour, so I got to get going. I probably should. So I'm gonna basically cut this off and say goodbye. But thank you for listening to the Knowledgeable Podcast, and I hope you come back. And I also would like to tell you to subscribe and like and turn on your post notifications. And I think I fixed the comment section so you can comment now. And again, anything I say here is not financial advice, and or anything I do or say is not to go out and do. It's just for entertainment purposes. I would like to thank you. And again, this is the Knowledgeable Podcast, and we are out.